Good day, ladies and gentlemen, and welcome to today's Gemfields Interim for 6 months ended 31st of December 2015. For your information, today's conference will be recorded. At this time, I would like to turn the call over to your host, Mr. Ian Hairbottle, CEO. Please go ahead, sir.
Super. Thank you very much for that introduction. Good morning, everyone. Thank you all for those of you who've come to join us for our interim results presentation for the 6 months ended 31 December 2015. Thank you also, and a big welcome to all of you who are dialing in via the webcast. This presentation is also available on our website. And with me this morning, I have Deb Shetty, our COO, who has just recently returned from a trip to Colombia. So don't forget to ask him questions. I'm sure you'll find it interesting. And, of course, Janet Boyce, our CFO, as well. For this morning, the format will be the following. We'll first take you through the results via the presentation. That will be followed by a Q&A, starting off with the questions from the floor, and then following by questions from those of you who've dialed in. So without further ado, if we can just turn in the presentation to page number 3. So for all of you who do know or don't know by now, the important thing with Gemfields is to remember that Gemfields takes a holistic approach. Our approach is sector-based, not just project-based or resource-based per se. And I think this slide sums it up probably as succinctly as possible. Within the sector, obviously there's exploration, there's mining, there's distribution, there's retail selling, and marketing and promotion. From a source point of view or a development and a production point of view, Gemfields very proudly has under its portfolio the world's leading expertise in colored gemstone exploration, mining, processing, and distribution. We also have within our portfolio the world's single largest producing emerald mine, the Kagem mine, in which we own 75%. The world's single largest producing ruby mine, Montepuez ruby mine, in which we own 75%. Kariba amethyst mine, the world's single largest producing amethyst mine, in which we own 50%, and more recently a 75% stake in Ethiopia, a very new greenfield prospective emerald deposit, and in Colombia a stake in a number of assets in Colombia, both greenfield and the Cosquez mine, possibly, it was certainly one of the 5 historically known major sources of emeralds from Colombia, and we believe a very, very exciting target. Over and above that, we've definitely shown competence and success, while the presentation is going to focus predominantly on the performance of our operations at the mining specifically, but we mustn't forget the success and the importance of the sorting, the grading, the pioneering platform in which we're able to right source. We're able to get the right volumes of material to the right downstream customers that meets their needs, so we can improve and support economies of scale, and all of that supported by our marketing initiatives, both direct marketing via Fabergé and indirect, more generic or sector-based marketing, either via very generically marketing emeralds, rubies, amethysts, and sapphires, or cooperative marketing. Increasingly, we're doing more and more cooperative marketing together with the big brands, and I'm finding that very pleasing, where some of the very big brands are recognizing and seeing the benefit of associating their brand name with the Gemfields company. So with that, and that just as a background, I want to hand over to Janet, who will run you through the results of the company.
Thank you very much, Ian. So if you move to slide 5. So the resources industry is currently facing a highly challenging environment. And I believe against this backdrop, Gemfields has delivered a very strong set of results. While many of our peer companies and a lot of the mining companies have focused on the short term, cost-cutting, capex reductions, even for some mine closures, we've continued to focus on growth while maintaining a solid underlying performance. So revenues for the period was $94 million. The difference against the comparative period is mainly due to the change in the mix of qualities and volumes of rough materials offered to our auction platform. This also impacted the cost of sales incurred during the period. The average gross profit margin was 49%, which is aligned with the overall gross profit margin for the full year 2015 of 50%. The EBITDA for the first 6 months of the financial year was $35.6 million, representing an EBITDA margin of 38%, which is the same as the EBITDA margin for the full year 2015. In the previous financial year, the distribution of the earnings was highly skewed towards the first half of that financial year, contributing to about 96% of the total earnings for that full year. In the current financial year, we expect that the distribution will be more even compared to the prior year. The net profit after tax was $8 million, which is EBITDA less depreciation and amortization of about $15 million, tax provision of approximately $14 million, and the impact of finance income and expenses. Our cost of inventory at cost of production was $107 million, and our cash in hand was $25 million at the end of the period. I will go through the revenues and the cost of sales in more detail in the coming slides. Gemfields maintained our commitment to the industry through our marketing strategies, advertising and promotion activities, our exploration and new projects. The total SG&A amounted to $26 million versus $24 million in the comparative period. The finance income and expenses include the impact of foreign currency exchange movements. And as a result of the devaluation of Zambian kwacha and local Mozambican meticash, we have recognized approximately $3 million of net FX gain during the first 6 months of the financial year. We've also successfully increased our debt facilities to $55 million, therefore resulting to an increase in the finance cost incurred during the period. We've also seen some positive news of potential changes in the tax regime in Zambia, which is very much welcomed by Gemfields, and we believe that this would help encourage continued investment in the country. After holding our Kagem-produced rough emerald and beryl auction solely in Zambia for the past 2 years, we have seen the return of the Zambian emerald auction back in Singapore with a higher quality rough emerald auction held in September 2015, followed on by a lower quality rough emerald and beryl auction held in Jaipur, India in November 2015. Our Zambian emeralds continue to enjoy firm demand, as evidenced by these 2 auctions generating total revenues of $54 million. In December 2015, we hosted our first ruby auction of the financial year. As a response to the market feedback, we've offered a mix of higher and medium quality rubies in order to support the increased demand in calibrated cut and polished gemstones. As a result, this auction cannot be directly compared against the December 2014 auction, which was predominantly of higher quality rubies. Despite the depressed global commodity prices, the well-documented difficulties in the diamond sector, and the overall tough economic environment, the demand for and the prices for our rubies and emeralds remain robust. It's also pleasing to see that Fabergé has done significantly well during the first 6 months of the financial year, with its revenues increased by around 70% and the losses decreased by around 21% during the first 6 months. Following on from the growth, expansion, development of our key operating assets, we continue to increase the scale of operations across the business. The total cost of sales was $48 million, compared to $36 million in the comparative period. The cost of sales include $27 million of mining and production costs, depreciation of $15 million, and change in inventory of $6 million. The depreciation amortization decreased compared to the prior period, mainly due to the updated amortization of the mining asset at Kagem, following the updated resource and reserve statement published in September 2015, which resulted to an extended life of mine of 25 years and increased ore reserves of 1.1 billion carats. $107 million of inventory at the end of the period, comprised of $66 million of rough and cut and polished gemstone and $41 million of Fabergé inventory. Of the $66 million gemstone inventory, $44 million relate to rough, emerald, and beryl. $12 million relate to rough ruby and corundum, and $10 million relate to cut and polished gemstone inventory. At Kagem, we've successfully completed on schedule our fourth highwall pushback in September 2015, which will allow access to exposed available ore for mining for around 15 months. After the updated resource and reserve statement published in September 2015, we now plan to have a more sustainable, continued open pit waste stripping at the Chama pit operation, which will allow access to at least 2 years' worth of ore production at any given point in time. The production increased by 31% from 12 million carats to 15.7 million carats, with the grade also improved from 202 carats per ton to 254 carats per ton. And this is a tremendous achievement while maintaining the cost at the same level as that of the comparative prior period of $22 million. This therefore resulted to a decrease in the cost per carat from $1.81 per carat to around $1.43 per carat, and the cash rack handling cost also improved from $2.90 per ton to $2.38 per ton. At MRM, the mining and the processing focused on the secondary ore deposits as opposed to the primary ore deposits. This resulted to expected decrease in the production from 6.3 million carats to 2.1 million carats, and the grade from 37 to 15 carats per ton. However, this focus on the secondary ore deposits resulted to a massive 341% increase in the higher quality rubies recovered during the period. We've increased the scale of operations in MRM with the total rack handling from 1.5 million tons to 2.2 million tons, while the cost of being well maintained decreased actually from 5.85 cents per ton to $4.75 per ton. The total ruby and corundum extracted since inception of the project now stands at 18.8 million carats, of which 6 million carats have been sold to date. And the total investment in the project, including acquisition costs, capex, and operating expenditures, now stands at $66 million. And out of the 5 auctions held to date, we've generated total revenues of $151 million. Let me now hand you over to Deb Shetty, who will discuss the operational highlights for the period.
Thank you, Janet. Thank you, Jan. Good morning, everyone. Just coming back from Colombia. So, starting from the Kagem, next slide, Janet. Starting from Kagem, the first half of 2016, Kagem mined 15.7 million carats. While bulk of the production had come from Chama pit, we also reported a very pleasing performance from Fibulele. Fibulele reported around 2.2 million carats for the first half of 2015 and 16, with a grade of 198 carat per ton. Continuing for the following year, we expect 2015 and 16 to end towards the top end of our range of around 25 to 30 million carats. So we should be very near to the top end of the range. In terms of exploration, we would continue the bulk sampling in Fibulele and Levante, but we also completed 4,000 meters of drilling at Chama. What we also intend to do is to increase the strike length of Chama from 1 kilometer to 1.4 kilometer. This would be more in line with what SRK had proposed in the CPR that we announced in the first half of this financial year. In terms of the mining and the wash plant capacity, we intend to increase the ore mining capacity to 180,000 tons, and also the wash plant capacity to 180,000 tons by financial year 2018. We also would target to have the production of around 40 to 45 million carats over the life of mine. After the completion of the contractor mining, the last phase of contractual mining, we have also decided to increase the in-house capacity from 9.2 million tons to 12 million tons, which we should be able to achieve by end of this financial year. the total spending for this expansion would be around $2.5 million. Then the second half of 2015 will see two auctions, one high quality auction to take place in this quarter, and one low quality auction to take place in the last quarter of the year. Moving to Montepuez, the first half of the year we mined around 2.1 million carats. The 2.1 million carats, as Janet said, was mainly because we were focusing on higher quality and a lower volume. The next half of the year, we are very confident to come very close to our target of around 8 million carats. The next half of 2015 and 16 would be basically focusing on both the Maninganais and the Mugloto, and that's the reason we are very confident that we would be achieving the target of very close to 8 million carats. In terms of exploration, the first half of 2015 and 16, after the SRK release, we have continued the auger and the core drilling program. We have covered more 45 square kilometer area with around 14,000 meters drilled, and the results have been quite encouraging. In terms of the mining capacity, we plan to increase the mining capacity gradually from 3.3 million tons to around 5.3 million tons by end of financial year 2017. As far as the wash plant is concerned, we plan to do two-phase expansion. The first phase being the upgradation of the current wash plant, which we plan to achieve by end of December 2016, and the new wash plant. Both put together, by financial year 2018, we plan to achieve 1.3 million tons of ore processing capacity and roughly around 20 million carats. In terms of auction, we plan to do one mixed quality auction in this half of the second half of 2015 and 16. Moving on to the new projects, just come from Colombia. Quite an interesting project, I think. We announced two acquisition. One Cosquez, which is an existing operating mine, which has not been operating for a while. The early results are looking quite encouraging, and also a bunch of exploration licenses. We are just waiting for the completion, which we expect to announce very soon. Ethiopia, we announced acquisition of 75% of 200 square kilometer license area. We expect roughly the ore body of around 45 kilometer, but we have just started the early stage of exploration there. In terms of Sri Lanka, the focus still remains on the on developing the trading platform, and also developing our early understanding of geological model there. With this, I'll hand it over to Ian.
Super. Thanks, Dave. We'll go back. Thank you, Dave. Thank you, Janet, for that. We'll just go on to Fabergé. Gemfields completed its acquisition of Fabergé in early 2013. At that stage, you must remember, we had one, if I can use the word, one firing cylinder. We had the Kagem Emerald Mine. We were very pleased with its success, but it was a single jurisdiction, single product. Fabergé certainly gave us the opportunity to expand our global footprint, our global recognition. And I have to say, while this hasn't always been the case, it's added a lot of value. You've certainly seen, and in the slides, we're not going to cover all the slides, but the information is there embedded further down in the presentation. You will see the impact in terms of increased global demand for emeralds, rubies, and sapphires, increased global pricing, etc. And Fabergé played a very important role in that. I'm very pleased to say, and I'm saying this not just on behalf of ourselves as leadership of the company and as shareholders, but I'm saying on behalf of the Fabergé team. They've worked very hard over a long period of time, and I think they've taken a stick for a large period of that. But the actual positive influence of the work they've been doing is very clearly evident within the last 6 months. It's still a relatively small business. It still has some way to go before it's delivering to the level that it deserves for such a great brand name. But we saw significant increase in terms of revenue generated, significant increase in terms of unit sales. And I think that's very important. That shows you that more and more people are appreciating the quality of the brand, and a reduction in cost and increase in margin. So those are all extremely positive things. And a lot more very positive things to come from Fabergé over the next 6 months. The Basel Fair is coming up very shortly. the world in large at the moment, as Janet said, it's mixed. There are certain indications of positive signs and also certain challenges within luxury and extractive industry. And I think some of you would have seen some of the bigger luxury brands, specifically those that went very long in China, have had a slightly difficult period. And I think Basel's going to be quite conservative. But Fabergé, I'm very pleased to say, we're going to be launching a number of real world-class product, just as we did last year. Last year we launched 4 new watches, of which one won an award, one came second, one was highly recommended, etc. And we've got a number more coming this year. So all I can say to everybody, watch the space, and certainly a very big thank you to the Fabergé team for everything that they're doing. If we can go to the next slide, and we'll stop here. As I said, there's many more slides, but I'm going to stop on this one for now in terms of this presentation. In terms of the outlook for Gemfields, the last 6 months has been a great 6 months. As the CEO of this company, I want to say thank you to my board, thank you to my fellow directors, Janet, Dev, Sean, and your respective teams. I think you've done an outstanding job. We've managed to, on a direct 6 months to 6 months basis, the revenues might look lower. I'm very confident on a year basis we will continue to show year-on-year growth. We've reduced operating costs on at least a tonnage basis. We've definitely reduced them on a carat basis at Cargem. We continue to improve efficiencies, and we're a significantly bigger business. We brought online, as Dev was saying, Ethiopia. We brought online Colombia, additional areas for future growth within Cargem and so on. So going forward, where do we see the business? We'll continue to drive and champion consumer demand. We're continuing to get very good responses from the downstream sector, whether or not it's the manufacturers, the retailers, and or the consumers for our product. We will continue to champion that as a company, while at the same time looking to increase our production from our existing projects, from Cargem and Montepuez, as well as adding to that new production, hopefully in the not too distant future, from Ethiopia, Colombia, and potentially a few others as well. So with that, just thank you to everybody, and I'll hand over to the floor and see if there's any questions. There we are. Emily, can choose. Thank you.
Thank you. Edward Stirk, BMO. Just on the, you've obviously got a lot of growth opportunities, and certainly looking at the emerald market, it looks like that can absorb those growth opportunities. But you comment in the MD&A that the ruby market's less developed, there's less access to capital. Given the scale of Montepuez, which is obviously world class, are you confident that the growth plans that you have there will match the ability of the ruby market in the future, the growth of the ruby market in the future, to absorb that additional supply?
Yeah, I am confident, subject to us doing the right amount of work. So you have to put that into context that ruby's production historically was extremely rare. So ruby's was historically recognized to be about 7 million carats per year. We're currently adding another 7 to that. And as I said, there are 2 components. Obviously, there's Sri Lanka and Thailand, who historically were very small businesses, very serious, but limited free cash, still slightly different distribution methodologies. And then with your emerald market, you've got your Israelis, your Indians, your Germans, your New Yorkers. And one forgets, very easily you look at what we've done with the emerald market in the last 6 years, and you think that the ruby will plug straight in. But you forget how much work we had to put in place in 2009, 10, 11, etc. But the results are showing now. So you can't expect it to plug right in. But the one thing I can say, if history is anything to go by, our coloured stone sector, they're very hungry for growth. They're very responsive to leadership, and they generally amaze all of us in terms of that. So with us leading and with them following and doing it in a structured way, not just mining and dumping as some shareholders would sometimes expect because of resources, I'm pretty sure we'll continue to grow in the right direction.
Yeah, and sorry, just to add what Ian said, before we started with emerald in 2008 and before, emerald was around 8-9 million carats, and when we said we would do around 25 to 30 million carats, the same set of questions was being asked. And what is quite important for us and what we are doing with our concept of Gemfields Inside and also our marketing platform is to create that platform for the ruby across the globe in the different sector of different countries and different regions. So I think the combination of both supply and the right marketing platform and using Fabergé also to extend the name for the Mozambican ruby, I think it's going to be the mix which will help us to achieve the growth.
Thank you very much. And I think you've probably in part answered my second question, but with a view to growing the ruby market, obviously the strategy for marketing for emeralds proved successful, but would you consider doing off-take agreements or supply agreements with major jewellery companies in order to get those ruby lines out there in terms of jewellery lines and so on, and build the consumer awareness?
Yeah, thank you for that question. It's a question we were never asked a few years ago because nobody even thought about it. Nobody even thought there would be a need for or a want for anybody to have supply agreements for the products. Over the last 18 months, we've seen many more of the downstream consumers actually approaching us and saying, can we have a guaranteed off-take agreement, etc. The reality is we certainly believe that we're still in a fairly early stage. And I believe my executive team agrees with me. If right now we signed an off-take agreement, while it would give some form of surety, in terms of off-take demand and revenue streams, I think we'd be giving away a lot of value. Let's just take rubies. If you think we're achieving a certain overall price per carat, a lot of that is skewed towards the finer, the few stones, the superstar stones. The rest of them are still selling way under value compared to even emeralds, definitely diamonds and so on. So there's an uplift that has to happen across the entire spectrum, right from the smallest, lower qualities to the top quality. And if you sign an off-take now, I think we're doing our shareholders, our host nations, and our sector an injustice. So we have to have a bit of faith in ourselves. But it is something that's coming to the fore, and certainly something that was never there, but we'll keep it in mind.
Thank you. Martin Potts from FinCap. Just a ruby question, multiple ways. Obviously, the mining has been skewed towards the higher quality stones in the last 2-3 quarters, something like that. Yet the auctions have gone sort of in the opposite direction, so I'm assuming that there's quite a big pile-up of higher quality material. Linked to that, you say that you're going to be doing at least one larger sized auction. Does that mean that there's plans for a second one in this half year, or how likely is that?
I'll answer first, and then Deb, if you can just follow in on that one as well. So from that point of view, your alluvial, it's always nice to have that, if I can say, the reserve in the safe. So it's higher, it's closer to the surface. There's a higher risk of loss because it's higher to the surface. There's a higher attraction for that. There's also, with us only having the single plant, in time when you have 2 plants operating, it's much easier to run more efficiency. And we have such certainty. We've got exposed primary deposit. Our confidence, as Deb said, when we move to that to be able to meet our targets is very sure. So from that point of view, while certainly from a selling point of view, you'd love to have it as evenly. You want to mine your production that's as evenly as possible, so it's a consistent. You don't want to skew it too much to the high end or too much to the low. But we had built up a stockpile. We're sure we'll easily be able to access that. So, that's really, it was a multi-factored reason why we did that. In terms of the market, we had a stock, so we certainly had a stock of all qualities there that we've used, and that's what we'll be able to. What was the other part of that question you asked?
The other part of the question was really looking at what you say here. You're saying at least one larger sized auction. Right. So basically, exactly. When are these higher quality stones going to come to the market, and are you alluding that it may very well happen in this half year?
No, so what we're saying there is exactly that, is that with the ruby specifically, there's a lot of demand for that that commercial product. And so that we won't be targeting, we'll definitely do that. But depending on, and we're trying not to dictate to the market. We're trying to be different to certain other players. I'll just allude to this part within the sector who historically have dictated. There's the product, there's the price, take it or leave it. We're trying to be different. We're talking to the market. The market's, was a little bit nervous towards the end of the year, not so much because of general luxury as itself and the global economies, but also because of what is happening in some other gemstone sectors. We've seen some positive news coming out of Tucson. We're looking for more positive news coming out of Hong Kong shows. And subject to the feedback from our customers, we'll then adjust. But we're confident of our ability to meet an additional auction if need be. And then the additional one could always be an additional lower quality or a higher quality, depending on what the market is saying.
Yeah. Just to add what Ian's trying to say and what you are trying to ask, and to put into perspective, whether we can do one more auction in addition to what we are planning, the answer is yes. Okay. Do you want to do it? The answer is no. And why? This year, and especially this half of the year, I think the shows around the world where our customer exhibit has been coming back to back. So there was a Tucson show in February, Hong Kong happening this month, next month, and again you'll be having Basel in 2 weeks. And then we have got a Emerald auction, then you have got one more Emerald auction. So basically we want to have one more Ruby auction. So where we are in the position right now is we want to sell in a fashion which will also help our client to sell onward. So what we are trying to do is basically support the market, not by rushing the sale, but also helping them to sell onward. So if that makes sense, what we are trying to do is structure the auction in a manner in this half of the year where it will help us to supply to the client, and the client can go onward and supply onward. That makes sense.
I can just say, hopefully that part was clear. Could we do it? Yes. Do we want to, because again, remember, we've got to balance both the downstream market and our shareholders and the analysts. You guys have got to target. And do we want to say to you guys, yes, we're going to do it, you might be happy, the clients might not. So that just gives us the flexibility for you guys to say, we've given, there's a general understanding of the targeted revenues, margin, EBITDA, etc. We've always tried to under-promise, over-deliver. We're fairly confident on doing that as a mix. Hopefully, if things continue to pick up, we could always do a little bit extra, but you'd rather always want to add a bit of sweetener than take away something towards the end. Does that make sense to you?
Yeah, it makes complete sense. So there'll be some sort of steer on that later in the
as we get feedback from the sector.
Yeah, but there is an auction this year, before the end of the financial year.
Michael Stoner from Peel Hunt. Please, could you give us an indication on the base level spend on growth projects before you announce kind of major capital projects, be it in Colombia or Ethiopia? Can you give us a bit of guidance on where we can expect that kind of just the lower level background spend to be?
Yeah. So basically, if I have to start with Colombia, basically, in Colombia, if you have to do the early geological, if you have to gain earlier geological understanding, we would be spending somewhere around $4 to $5 million approximately, and that is even before we start thinking of developing an underground mine. In Ethiopia, it won't be to the extent of $4 to $5 million. I think we would be spending roughly around $2 to $3 million, and again having an initial understanding of the geology there. Sri Lanka, we are not spending as much, but I think as we are developing the understanding of the sapphire market there, and also developing the trading platform, we don't expect to spend more than $2 million even in Sri Lanka.
And Michael, just to add, and then maybe Janet if she wants, but remember, Ethiopia is very new. It's greenfield. Colombia has been running for many years, but there's no formal geological record, so that you have to treat that as a greenfield. So what Deb is saying is the initial spend is possibly area magnetics, team on the ground, a bit of trenching, etc. On the basis of that, you then build your resource plan. In other words, what do you need? How much diamond drilling? How much bulk sampling, etc. to come with a resource statement before you come with a long-term mine plan. But that initial expenditure really gives you sufficient confidence that you're not going off and just diamond drilling in a place where you're throwing money away. These are all very new areas. And Gemfield has a history of, we spend this out of free cash flow, but cautiously to give maximum knowledge with maximum return, but minimum, not just throwing money at it.
Okay, understood. And were those numbers all FY16?
No, so
that's next 12 months.
So that's going to be for Ethiopia, probably around the next 12 months. Colombia will be between 12 to 18 months' time.
And again, just on that, how long is a piece of string? Because, if you're very buoyant of the markets, you were very cash flush, you could spend that same amount of money very soon and get those results immediately. But right now, a slow, steady, cautious approach means you can spread it out without increasing the risk massively, but certainly containing your cash.
Yeah. Okay. And then looking at the timing of the trade shows, is there an equivalent kind of skew to the timing of your marketing spend through the year? So is H1 radically different to H2, or is it pretty flat through the year?
So probably 2/3 of the marketing spend is geared towards the second half because of just the trade shows, the Basel World, Doha, and a few others.
But also remember, a lot of our marketing spend is consumer-based, not trade show-based. So there is a lot. We do B2B marketing. We have a presence at the shows. We support the customers. But a lot of it is consumer-based. But increasingly, as we're doing the cooperative, we're actually getting a bigger bang for the buck. In other words, much more exposure without us footing the entire bill because we're doing cooperative advertising with other brands.
Yeah.
Okay, thank you. And finally from me, has there been any impact on pricing hosting auctions outside of Zambia? I mean, because there was concern previously that it would hurt pricing when you're forced to host them locally.
That's a difficult one to answer. Our next auction, because we promised, so with the Zambian government, when we started moving out, we said we'd maintain Lusaka on the circuit. So they're very happy that we now keep a circuit, but would also like us to coming back to Lusaka on a reasonable basis. There's no fine, it has to be X many times. Our next auction, which is in March, is going to be a high quality in Lusaka. It's difficult because here's the issue. So we had a number of very successful auctions in Lusaka. A lot of that was also driven by the success we'd had pre-Lusaka. We did see with the Lusaka ones, there was a success in terms of numbers. There was beginning to be a drop in terms of actual number of companies attending the auctions. And I'm very pleased to say that through interaction and the presence of the government on site, they themselves were aware. So very often, where you have it doesn't have that impact straight away. There's a knock-on, there's a lag effect, and one has to look forward. There was also clear indication that a number of other producing areas had seen the gap we left in the world market and when they're looking to fill it. And, after Zambia being a distant third cousin to, even to Brazil, never mind Colombia in terms of global emerald sales from a dollar value, and them now being number one, they didn't want to lose that position. So they recognized the need to stay ahead, a bit like Coca-Cola. They spend a lot on advertising, but if you stop very quickly, Pepsi pops up. But it's not an immediate effect, it's a longer term. So that's really how we're seeing it.
Actually, touching on your supply growth kind of numbers you were talking about earlier, how many extra stones you've added into the market. Do you think you've displaced any other producers, kind of some of the smaller, less professional guys?
No. If anything, we've driven price. So we've driven demand, which drives the achievable price, which actually makes the small guys more profitable. So if anything, we've seen an increased number of people mining in concessions around, whether it's our emerald mines, our ruby mines, our amethyst mines. But not only that, and this is very interesting because it's all indicative of the growth and the maturing of the sector. We've seen more and more listed companies looking to come into our areas. So you'd see, the success of, for example, True North for its rubies in Greenland. We would have seen, some of you just recently, a company called Mustang looking to come into our area around us. And these are all listed companies. And that's besides a number of smaller private companies coming into those areas. So, and that's our commitment. Our commitment is to grow demand, grow profitability for the entire sector so that the host nations can get maximum benefit, and we're definitely seeing that.
Okay, so with the only coloured stone kind of professional auction setup, would you look at reaching agreements with those other future competitors to sell stones through your platform? Yeah,
absolutely. We've offered that since day one. So since day one, part of our inclusive, as I said, we take a sector-wide approach. We believe what we're doing is 100% correct. And since our very first Cargem auction, we offered the ability for other participants to participate, to come in, and we would help you sort and grade. You can use our auction platform, etc. One of the things, I need to say this cautiously, but we are very focused on transparency. So we disclose number of carats, we disclose the revenue, we as a result pay the royalties and we pay the taxes. Not everyone in the sector has been quite as committed to those elements as we are, and as a result some have been nervous. But you would have seen more traction in that direction. So again, certainly we are finding more and more other participants eager to talk to us and say, Ian, is there a chance we can work with you? But it does take time. I have no doubt that when you do it right, everyone benefits. The sector benefits because of increased transparency. The host nation benefits because of increased revenues and tax. And you benefit because your actual transparency means you can have a high level of confidence supported with advertising and marketing. But it takes a while for some of the others to catch on to that and realize that they actually make more money, sleep well, etc., if they're transparent. But the momentum is very positive.
Also, when you produce and supply more, especially your low quality, which is a high volume, the way you strategize and the way you develop the market is to help many small scale cutting and polishing guy to come into the market and to provide them the supply, which in turn helps them the liquidity because the demand is there. But as you get more and more small scale producer in this market, basically it helps to grow the market. So it's a good point.
So it's not just the producers, it's actually the cutters, the polishers, the manufacturers, and possibly even through to the retailers. You get more volumes coming through, which builds the entire market all the way down the pipeline. We've certainly seen that here.
Thank you.
Thank you.
Carol Ferguson. Just a follow-up question on that sort of volume production, because you've talked about sort of, working more with mid-tier jewelry companies and maybe, having more kind of like a mid-tier pricing model. Could you comment on that? Is that just the market getting more mature and your low-quality guys, getting better at getting better pricing?
Yeah, I think so. Thank you for that question. It's indicative of the entire market maturing, right through from the mining, through to the manufacturing and the retailer. So what happens for a very long time, because, if you think rubies, emeralds, and sapphires were marketed by the history books, the demand for those products tended to be limited to the equivalent of a 5-carat D-flawless diamond. And, they were there, or maybe even a 10-carat. So it was the big stones, your Lady Diana kind of, really champion-colored stones surrounded by a few diamonds. And the rest were almost neglected and sold on a very odd occasion. And so, your production curve is a hyperbole. Lots of the lower volume, lower value stones, very few of the finer stones. Your price curve should be a reverse hyperbole, and it wasn't. But as the industry formalizes, your high-quality stones achieve more demand and a better pricing. So, same is true for your middle and same is true for the lower, because there's a better recognition across the entire consumer base that every single one of those gems. Bottom line, all of our emeralds, rubies, and sapphires are significantly rarer than diamonds, all of which is significantly rarer than many luxury goods, your fashion products out there. And consumers just didn't know that. But as you market it and promote it, people will often say to me, Ian, what's the right emerald to buy? What's the right ruby? And the answer is the one that's right for you. And the one that's right for you depends on your taste, your pocket, your budget, etc. at that point in time. And each one of those needs to be priced accordingly. And we're definitely seeing that in demand, which again is indicative of a maturing market. We've got a long way to go, but we've come a very long way in a short period of time.
Yeah. And also to add what Ian is trying to say, basically, to put into perspective, in Kajam, when we grew 8 million carats to 30 million carats, we generally, we developed that market right from the bottom, increasing the base of the cutting and polishing guy. But if you go back and put the same analogy for Colombian emeralds and rubies, Colombian emeralds of production, which came down significantly, whatever, 8 million carats to straight down to 1.5 million carats, which technically took a lot of the cutting and polishing guy out. So what we have to do is just to bring them back. So we don't have to add more people. There is an expertise, there is an understanding. Similarly in rubies, when Burmese production was at the peak, and the numbers are not readily available, but when we see the drop in the production, so with we supplying additional, what we are trying to do is bringing back those cutting and polishing guys back in the market. So we're not adding much more, but our next thing would be to add more B2B guys coming into this platform.
You're growing the market by adding confidence.
Yeah.
But in terms of pricing, do you see that the sort of mid-tier being a sort of premium to the low-end, average carat price per carats that we're seeing?
Yeah, so everything will go up. So your lowest qualities, if I could say your TV channel and your real low-end retail prices, your mid, your high street, and your high-end, all of them have a massive scope to go in all of the product, but especially so in rubies. In rubies, you find that your premium, your really top ruby, has been selling. So let's say a 5-carat, super clean, top-quality ruby would be selling above a D-flawless diamond. Still selling at this stage below a pink or a blue diamond, while it's probably just as rare. So it's all on a comparative basis, but selling above a D flawless. But the rest qualities are selling significantly lower than, let's say, a D quality, never mind flawless diamond, or even a G or an F. And yet they're rarer. So there's a scope for growth in pricing across all qualities.
Luke Nelson, JP Morgan. Just a question on cash flow generation. Generated negative cash flow over the half, and by my calculations haven't generated positive free cash flow since the December quarter of 2014, over a period in which auctions have been seemingly very strong. What confidence can you give us for the business returning to positive free cash flow, and also do you expect cash flow to be positive in the second half, sort of by your internal modelling and calculations?
I'm going to let Janet answer the rest of that. I just want to kick off with that. is, the real answer to that is depending how aggressively we continue to grow and whether we're positive about it. So, driving a lot of that, what appears to be negative cash flow, is two massive resource statements. They're not cheap to do what we did for Kagem and Montepuez, but it makes a massive difference in terms of the business. If you take, for example, Kagem, our initial resource said that we had to go underground, so the whole high wall pushback, etc., and the way we designed our ramps and the kind of equipment we bought was based on short-term moving waste and then at some stage going underground. Now that we have a 25-year open pit mine plan, you can start changing to a much longer-term pit design. So you can move from ADTs to fixed-wheel trucks and a few big excavators and big trucks as opposed to smaller ones, which drives efficiency. But that is short-term cost, long-term massive value. Then you add to that Montepuez and the cost of Ethiopia, etc. So if at some stage we say, right now and we could do it, we could internally make the decision that right now, and at the moment we're kind of there because we don't only have to grow the business, we have to meet the skills, the actual geological skills, the mining skills, the distribution skills, internally as well as the market. So we've always grown, caught our breath and grown. So right now we're kind of at a catch our breath, and from that, a steady state point of view, we definitely see ourselves heading back to profitability fairly soon. I'll let Janet talk to that. But from the massive opportunity for what we recognize out there to continue to expand. I mean, there are incredible gemstone producing nations that haven't even been touched. I mean, I'm just going to mention Madagascar, but there are so many others where I always say Madagascar is equivalent to the Garden of Eden of colored stones, and we haven't even touched it yet for various reasons. And if that suddenly comes to us tomorrow, we'd be crazy not to approach those, but it could kind of impact cash flows in the short term. So you've got to balance growth of the business against growth of cash.
Yes. So if we look at just the pure operating cash flows, we're actually cash positive. It's just that for the last 12 to 18 months, we've been focused on reinvesting the cash flows generated by the business back into, one, both Kagem and MRM, but also expansion of the other projects. And that's resulted to what we see now as a negative cash flow. We would see continued reinvestment of the cash inflows back into the business. We believe that by doing so, we create more shareholder value, and that will be the best use of the excess capital that we have. For the second half of the financial year, I don't see a significant change in terms of the cash flow projection as that from the first half of the financial year, given that we will have the same mix of quality auctions unless we do an extra auction, for example, in rubies. At the same time, we would still continue to develop Cosquest Mine, our Ethiopian project, and the Sri Lankan project.
Yeah. Also to add that we have not extended the contractors' contracts. So the first half of the financial year had big component of the cost that we spent on extending the fourth floor pushback project, which is not happening on the second. So that is going to be a significant saving of like $10-12 million. But we also have extended ore life, institute ore, which is available. So with three auctions basically planned in this year, the reduction on some of the spending, but also growing, that is a bit of a off. But I think as Janet said, we should be having cash positive in the second half.
And that's just a good point. So I think we've got to go to the TV, but sorry, it's a good point. People don't always see, they see the cash flow, but they don't see the positive impact of ore reserves when you do a high wall pushback and you now got exposed ore reserve. And it's difficult for it to be seen, so it's good questions, but there's a lot of value added in the business. With that, Emily, I think you were just saying I should go to any of the questions from the telecast. Is that correct? Okay.
Thank you. Ladies and gentlemen, if you'd like to ask a question, please press star 1 on your telephone keypad. We have no questions at this time.
Okay. So without further ado, I'm just going to say thank you very much once again to all of you dialed in, to all of you who are present. We're going to hang around a bit, so very happy. Thank you. I really enjoy those questions myself. I appreciate your interest in our business that we love. Thank you.